try and get the U.S. on the metric system, because everything would then be differently priced. And it's a way of burying shrinkflation, because you would now be buying your gas by the liter instead of by the gallon. Anybody who wants to take any action on this, I'm wagering between now and the 2024 presidential election that somebody tries to start the metric system for universal use in the U.S. If anybody wants to try and take action against me on that. Because all of a sudden, your meat, you'll buy 100 grams of meat, which is 4 ounces, but it seems like 100 grams. And there's plenty of Americans who have no clue how to use the metric system. So, it's an easy way to pull shrinkflation off without any problem. Oh, look at gas. It's only $1.62 now. Yeah, for a quart.
Yeah.
Well, we're already running 5Ks, right? We think we're doing pretty good. So.
Yeah, we figured out how to run a 5K. Yeah.
Oh man!
Like we're going to be hit for the fryer next week. I think I looked at my forecast here in Southern Illinois, 100 to 101 degrees for 3 days.
Yeah. Here, we're going to maybe have a chance of some rain, maybe a little bit this weekend. And then on Monday, it's game on, highs 95 plus for the first 4 days. And then we don't have a single high that is lower than 88 for the next 2 weeks, and most of them are printing 90. And there's that little chance of rain every day, which is, it's got the same chance a snowball will out there. It's just not happening. So soil moisture is good right now, but we could be looking at a very different situation in 3 weeks.
Mike's comments this morning I thought were pretty good. 5 to 100 adverse effects, and there definitely will be some. But he was talking about, great catch corn maybe in central Illinois.
You're breaking up. Yeah, we can only hear every other word.
Yeah, breaking up pretty good.
We've actually are getting some showers here, so my internet signal's strong, but my Verizon is not. We'll try it like this. Sometimes it's a bit better. But now what I was saying was Mike Toohill, he sent some comments out this morning, and we talk about 100 degrees as being adverse. And it's not going to be very much fun. But for central Illinois and some places where they've got some adequate subsoil moisture, there might be some catch up in that growth cycle on the corn. So he continues to talk about 10 days behind. So there could be some benefits to it. It'd be nice if we caught some of those rains along the way. But they've missed some up in central Illinois. I don't know. Haven't looked at our attendees yet, but I see we've got a couple of central Illinois, Indiana folks on here, and I think there's a little bit of a chance today. We got about a 10th down here, so not getting them right now.
Yeah, GDDs are a little short here. The first 5-6 days, it's okay. The next 5-6, it's going to get a little weird. If we don't get any moisture after that, all of a sudden 3 weeks from now, that puts us 21, 31, that puts us coming right into that pollination period. All of a sudden, if we don't get some rain and it stays hot like that, things are going to be different. Yeah. And the market's going to get real jittery after about a week of hot. 1 week won't be a big deal, but the second one, people are going to start getting a little worried, I think.
So a crazy combination to put the market on edge. Is we got the WASDE report today. We continue to wait for the Ukraine effect in all these numbers. Number one, Sterling, let's talk about this. You mentioned the fact that candy bar won't move at $2, especially when you lessen the quantity. So I'm going to ask this question because it leads to higher prices, right? And it also leads to a number that can't stay here. But take Ukraine out of the equation, okay? And the USDA is kind of stuck at that 1.3 billion bushel corn carryout number, our leftovers. Take Ukraine out of the equation and don't do anything for price right now. How low does that carryout get chopped to on paper?
On paper, we're probably looking at sub $1 billion.
So maybe as low as 700 million?
That would be, at that point, that's going to be extreme. And what will happen? We're right now, everything's running hot, but we're okay. If we have a crop problem or whatever happens to push this, prices are going to start moving up again. Upside may be limited. What this is going to result in is an immediate demand destruction. And that's going to present itself in the grocery store to the consumer as shrinkflation, one, meaning the candy bar is still $2. It's small. Guess what? People don't buy with their brains. They buy out of habit. That's how they work. That's how people work. So that is how it will present itself. So we may have some limited upside here. We're already seeing the cattle herd shrink, which is the first thing we'll look for. And then we're going to have this sporadic, annoying 1978 all over again inflation where this week it's aisle 5, next week it's aisle 7. Oh, they just got you at the meat counter. Every time you go, you're going to feel like you're getting mugged somewhere else in the grocery store.
So it's going to be real interesting. I'm a bachelor this week, so Cal and I are batching it here at the house. The girls are gone; they're doing the girl vacation, and so we're doing our own cooking. Okay, so this morning I'll have to admit the cooking came from McDonald's. All right, I'm just going to say it. I bought 2 value meals at McDonald's. They were $16.50, and that wasn't anything extra. Now last night we put. And get this, last night we put 2 ribeyes on the grill. Pretty nice ones. Can't tell you how many ounces, I forget. Nice sized ribeyes, the size of your hand. And we paid $16. Now, it looks like we might see, and I realize where the McDonald's gap is at versus the raw meat, but I've got to think at these restaurants, here pretty soon, especially on the fast food level. I mean, you've got to have some type of cuts there, and then you're talking about, the meat situation where you've got some liquidation, taking some feeders to market just a little bit shy of where you want them to. They're moving through. What kind of time lag do you think we're really looking at before we see that chop? Is it 60 days from now? Because it won't be the day that we see it or we talk about it here on WASDE. There's going to be that period of time.
There's going to be
back.
I think 60 to 240, depending on what product it is. But then you're going to have the aftermath of this, and this is going to be a hangover that's not going to go away. If we look where Natty is right now, we're at $8.67. That's the same price in October. That's twice what it was last October when we were having input price issues.
Right.
Guess what? Those aren't going away. And we are going to need these grain prices if we're going to be able to pay those input costs, or you're not going to plant as much or you're not going to fertilize as much. Either way, it's going to shrink supply.
Yeah. It's we've talked about this thing for 24 months now, that there is a time when you are going to have demand destruction. And honestly, I've been surprised that we haven't seen really even much of a diminish in that. But it certainly seems like we're right around the corner from it right now.
Yeah, well, if you look at the consumer credit the last 2 months has gone up the most it has ever. The consumer still has a lot of cash. The economy is a natural absorbing rebalancing system. Inflation is how you correct for too much monetary supply. And if you look, I put in some charts a couple of weeks ago, the M2 supply. And inflation moves like electricity. It follows the path of least resistance. What is the easiest thing in the world to raise the price of? Gasoline and groceries. Everybody needs them. Everybody's going to buy them. So it takes nothing for that guy in a little office in Walmart to raise the price at every Sam's Club in the U.S. It takes about 10 minutes. So that is the natural force of inflation. Things out on the edge, you may see deflation. If you're looking for a uber high-priced German automobile, you're going to see deflation there. But if you're going to McDonald's, it's going to be a different story, because that's how inflation works across a macro economy.
So we get into this situation right now, and we may be at a good time of the year not to feel the shortage. And the cash market always, in my opinion, the cash market always reflects the truest supply and demand. We're looking at some numbers today, and you and I, we both know we've gone back to May, we've gone back to April and March, and we kept looking for that. Is that Ukraine factor in there? Well, the cash market's got it in there. We may not see it on these numbers. Sometimes the futures market may not see it on there. Let's talk about these numbers before the report, Sterling. And I'm going to point to the corn number, because I think that corn and wheat are probably the most affected by any change from Ukraine. The corn number as it stands right now, do you care to walk everybody through where that ending stock number is as an expectation prior to the release?
Right now, we're at 1.351 billion bushels. The prior number, that's the expectation. The number was 1.36. So we're not looking for a big change here. Right now, this number is based off of, where we're guessing acres are and a 177 yield. This is, if you picture, bearish being 2 billion and above, you have an area of neutral, call it 1.4 to 1.8. That's kind of neutral, depending on where you are. We are at the top end of what gets bullish, heading quickly towards what could be very bullish, meaning we don't hit the 177 yield. We see corn acres not as exuberant as maybe expected, or we see soybeans. We see some change in that acreage. We may see more corn acres. We may not. We'll see how that plays out. But we we have no margin of error. That's the best way to describe this.
A great plug right there, the June 30th acreage report. We're going to be broadcasting that live. Now, I give you some sneak peeks behind the scenes as to, I'm going to talk in generalities. We can't get into details on here, but what we're seeing at AgriSompo North America as far as what formally comes through in regards to the claims on prevent plant, we're not seeing anything that's out of the ordinary right now with the total number. So, we hear the stories of North Dakota, Minnesota. We see the pictures in the virtual crop tour. We've got an awesome picture from Minnesota in the virtual crop tour, of farmers farming around the ponds or the ponding areas in the fields, which I know that's somewhat common in North Dakota and sometimes in Minnesota, but they're going to great lengths to plant the crop. I think it would surprise folks how much corn got planted up there. We may slip a little bit on the corn number on this June 30th report, and that's kind of the sneak peek, but I have a feeling from the prevent plant claims that we're seeing filed that a lot of people are defaulting to a fully insured acre of soybeans, and prices have a lot to do with that, and farmers like to plant the crop. So if you're sitting here thinking, oh my gosh, we're going to lose a lot of acres on this June 30th report, that's probably not the case. We may switch some acres from a commodity we thought they were going to be in. So
I would definitely expect reshuffling. We're going to reshuffle acres, particularly in the Dakotas and North Dakota and parts of Minnesota. Number two, if you can double crop, if you ever wanted to double crop, you ever wanted to try this double cropping business, here's your chance. As you're sitting here, you got really good soybean prices. We've got good soybean demand, and soybeans can be affected by the situation in Ukraine. Ukraine produces a lot of rapeseed and a lot of rapeseed oil, and if you don't have that, guess what? You need biodiesel in Europe, especially if you think our diesel prices are high. Try it over there. I think, the market can certainly handle all of that without it moving it too much, but we're certainly going to see a reshuffle and double cropping going on.
Well, it looks like we're just a few seconds from maybe a minute from release here. What's the countdown to on your screen?
We're about 45 seconds. You can see the clock here. If you can see my pointer, it's right there.
In 45 seconds, we concentrated on corn. What else? Obviously the wheat we want to keep an eye on. Soybeans. What do you see to point out before the release?
Soybeans here at 294 expected, 310 last time. When I submitted my guesses on this, I had soybeans down to 290 on some better export ideas.
And those
so
have
I shaved
trickled
ending
lower
stocks
over
from
the
last
last
year.
few months. Those have come down quite a bit from the March WASDE. So maybe not surprising to the crew you're talking to today. We kind of anticipated that. We still think the corn number is probably not right, but it hasn't changed much over March. So soybeans definitely something to watch.
Here we go. Corn ending stocks 1.4, up just a little bit. Corn yield still at 177. No surprise there. Soybean ending stocks 2.80, which was actually below estimations. Soybeans are probably trying to rally here while they're coming off the lows. We got a lot of other things going on today. Wheat ending stocks at 627, looking for 622, 619, so we were pretty much in line with expectations there. Cotton 290, unchanged, and that beat expectations a little bit. So let's move this around a little bit, and let's look at world corn ending stocks. Came in at 310. The guess was 304. Last time was 305. I don't need to even look at the report to tell you they did not address anything in the Ukraine. Otherwise, that number would have been lower. Soybean production came in 126, a little bit higher, so mildly bearish there, but again, not that big of a deal. And let's see about soybean ending stocks for the world 100. We were looking for 99.3, so that wasn't really changed too much. So all in all, not that big of a shocker.
You look at the corn number, and it doesn't feel, that corn number went up 1.4 billion. It doesn't feel like the market believes that's really a 1.4 billion. I mean, the trade feels strong. The market is, I think the market would be shocked with anything around 800 million. I don't think the market would necessarily be shocked at a 1.1. I think there's kind of a consensus out there that we are less than 1.4.
Yeah, I think that's it. And right now, the grain market's being quiet, but we have a completely different global dynamic going on. The dollar index is up fully 1% and back to the highs today. And Wall Street is getting slugged about the head and shoulders of the 2x4. And that's probably keeping some risk hands in pockets, and we have energy lower on this too. So there's other things besides this report that are probably keeping what should have been seen as a neutral, a mildly friendly report. We'll call it very mildly friendly. And it did lift the grains off the lows, but there's other things making them lower today.
So, Sterling, I'm going to get you on your soapbox here at the end. Christy, I'm sorry. I've seen your social posts over the last week, and you talk about the ignorance of the American consumer. You kind of touched on it, a liter versus a gallon and things like that, a quart versus a gallon earlier today. But yeah, you have to kind of take a look at this thing. And I saw some headlines on some major networks about how we were 90 days away from running out of wheat worldwide. They didn't take into consideration harvested wheat over the next 90 days. But how much of that plays into cash markets? Do you see through that, or is there any impact from that consumer mentality?
Well, what the consumer doesn't understand is the price of what something is sold for has absolutely nothing to do with what it costs to make something. The two are not related. Think back to the hog crisis in 1998. Hog futures were at 20 cents a pound. The price of a ham at the grocery store, sharply unchanged. Two different markets, two different variables. Inflation is and always has been a monetary thing. That is what it is. The money supply is too big, and inflation is flowing through the economy through the paths of least resistance. That's what's happening. And, is this going to affect cash prices? Supply and demand will create something. There's a difference between inflation and price appreciation. If we see tighter supplies, the value of that grain, if you value it in euros, rubles, gold, glocknies, whatever, will go up, and that's not inflation. And that's something that the consumer is going to, feel an impact of, but it's wrapped around a lot of other things. If you think about a loaf of bread, there's about 15 cents worth of wheat in it. If you think about how much diesel there is throughout that whole supply chain, it's a much different situation.
It is. You know, we've talked a little bit about this in the past, and some of our attendees today have been in the grain business, and they can tell you in the grain business from a business perspective, when we see a rough year starting to form up, if we see acres not getting planted, we see yields going to be down in the area that are going to affect our handle at the elevator. And this is true for any business, you start making adjustments. And when you take a look at how we ran a business, you really can't do much with your utilities. You've got to have your facility open for farmers to dump there. You don't really have your cost of goods sold really aren't in your hands. But the one thing you quickly went to was labor. And so you would look at your labor force. You would try to make as many cuts as you could. This is kind of interesting right now. We think a lot of times about, you mentioned the interest rate hikes and how interest can maybe affect inflation at some point in time. But we're pretty limited. A business is pretty limited on what they can cut. They can't cut out labor because we're so short labor here. You're pretty limited to one of the only things that you can do is raise the cost of the price of your product at the end. And energy, I don't think we can really emphasize this enough. Energy prices right now may have as big an impact on inflation as anything else. What are your thoughts on that statement?
Absolutely. Labor costs, right now, labor has the strong hand, and you simply can't find the help. At some point, if help costs me $17 an hour, automation costs me $21 an hour, at what point do I make the leap? And I think for a lot of businesses, we are getting to that point to where we are really kind of starting to get to that situation where you're going to see more and different kinds of automation. I mean, you see it here in the McDonald's. Walk up to a kiosk, punch in your order, get the food. There was a new Taco Bell built in Minneapolis where they drop it down. It sits over the street, can handle 4 cars at a time. It's almost completely automated other than making it. You punch in your order, swipe your card, drive up, it drops down in a little elevator, and you take it out the window.
Yeah.
And that's eventually we're going to see more of that. That's going to be the issue that businesses are going to be confronting.
Let's think about this. We got a lot of agents on here, and our revenues largely depend, our premiums, they largely depend on the base price of commodities. Okay, if we were hedging income, if we were trying to hedge our income over time, there's really not a great corn, bean, wheat hedge that I would just point to right now and say, listen, you're an independent agency out there. If you're worried about a decrease in revenue due to price, this is what you need to do. Is there anything on the energy side? Because we sit here and talk about, assuming that prices decline at some point in time in the future, and they do precipitously, does energy lead that charge lower before proteins? Is there going to be a leader and a follower? And that's the first question. And if so, where would I try to hedge myself as an agency?
Okay. If you're looking for lower energy prices, that is actually probably the easiest place to get a cheaper hedge on than trying to do it in the grain market. First things, energy is down today. This is the first time it's been down all week. Second of all, we are entering hurricane season, and my 2 biggest high-risk warnings are, 1, we get our 3 weeks of heat and it turns into 9 weeks of heat here. That's a real problem. It's going to push grains higher to a certain point, but it is going to result in demand destruction. The second fear is a hurricane comes into the Gulf of Mexico. We're already draining the oil reserve. If we have a knockout of production, that is a problem. If we were to lose a couple of refineries, the last time that happened was with Hurricane Harvey when it hit Houston. Gasoline prices went up 35% in 2 days. Okay? Those are the 2 biggest risks to the economy, other than things that'll get me on my soapbox and in trouble, which I'll just stay off of. Those are the 2 biggest nearby risks. Buying puts in the energy market is actually probably the easier thing because it trades every month. It's extremely liquid, and the market suffers from a natural backwardation, so you can buy a lower strike that's actually nearer to where that future is trading. So that would be the first thing. And again, you're hedulating here because you're speculating that crude oil falls out of bed and grain prices go down. Doesn't have to happen. Second of all, I studied the inflation from the 1970s. Crude oil from 1975 until the Iranian crisis in 1979 didn't change at all. It was basically the same price the entire time, and we endured inflation. If you look at inflation going back to the 1970s, the highest grain prices were in 1973. So again, that doesn't necessarily correlate, but if we were to see a commodity collapse, which would be timed also if we were to see the stock market suddenly see the S&P trading below 3,000, the energy market will break, and you'll probably get the gratification you need from the later grain prices that way. That is something you could look at, but it's not a perfect hedge by any stretch.
And we'll wrap it up here in just a second. But you talked about going back and studying history. You did a pretty significant study about 3 months ago. You looked at inflation as measured by a consumer price index, I believe. You looked at a real estate, basically a farmland index as well, and you looked at prime interest rates. And whenever we first started to look at that, my assumption was we would see a direct correlation between interest rates and that farmland. And when we took a look at it, that didn't look like there was a direct correlation, but we did see something. And if you remember this is kind of important to remember for the business that we're in. When we saw that CPI soar within 4 to 5 years after that, well, it doesn't happen very often, we saw a decrease in land values on the farm. So just something to keep in mind. I assumed that in 1980, when prime, I believe, was at 22%, that was the time where land was going to be lower. That was not the case. But there was a little correlation between consumer price index going through the roof and those farmland values going down within a 3 to 5 year time period after that. Just something to kind of keep in mind.
Yeah, there's going to be a delayed effect. We're starting to see some of that in some places in the housing market. Mortgage applications that came out earlier this week or late last week came in at their lowest level since 2000. Because interest rates have moved up noticeably. They had actually come down 2 weeks previous. They are back up just underneath the highs today on the inflation numbers. And when you look at, overall cost of land, a house, anything, doesn't matter if you pay for the house or if you pay the interest, you're paying the same amount of money. So there's a delayed effect and it takes time. And you have to think about the consumer of farmland too. Who is the biggest buyers of farmland now? The big institutions of all sorts, shapes, and sizes. They can bide their time. The cost of that land is spread out over many operations, and they maybe, have a farm component in here. But if I'm buying land in western Douglas County, Nebraska, am I buying it as a farmer or I'm buying it as an investment because it's going to be suburban 5 to 7 years? So there's a lot of moving parts, but generally it's a delayed effect. But it most likely will happen unless we get a new pricing regimen for grains, which is not entirely inconceivable. When I started at the Board of Trade, corn was $2.20. Corn found a new low level at $4. It's the ethanol era. If demand, eventually global demand continues to grow, we have isolated supply. When Russia is taken out of the picture for whatever reason, maybe we see a new price regimen for corn. I wouldn't count on this, but maybe all of a sudden $5 becomes cheap corn. That's not inconceivable. But again, that's something that will take time to generate.
Well, we've been going for about 30 minutes here, Christy. I've tried to plug 2 of our events. We got week 5 of the virtual crop tour coming out later this afternoon. Just to kind of give you a sneak peek of that, our surveys show widespread improvement. We always know that there's those pockets that have suffered, but overall, a little bit more optimism from our survey. We're seeing some planting progress up in the Dakotas. So make sure that you check that out. We're always looking for participation. Fill out our survey, send us a picture. We'd love to showcase that. But probably bigger than the VCT is the June 30th crop report. Sterling and I have talked about those acres a little bit today. That's something that you definitely want to put on your calendar. So with that, Sterling, any final thoughts before we wrap it up?
Make sure to read today's weekly wrap-up. We had some inflation numbers this morning that were absolutely horrible. We had some consumer sentiment numbers that make the inflation numbers look nice. And we had the worst consumer sentiment number in history came out today from the University of Michigan. Lowest since the Carter administration. So I'm not going to go any further on that. But we are going to be definitely entering a period of increased market volatility for everything. And I will cover all of that as well as, the few changes we had here in the WASDE. And the podcasts. Have we plugged the podcasts?
We haven't, and that's something you need to talk about.
Okay. We have 3 podcasts today. I do one right around 10 o'clock in the morning. This is going to replace the market call. We've had a lot of trouble with the market call. We have people who can't hear it, a lot of quality issues with it. Also, we have a couple of very bad time constraints with it where if I don't get that done in 2 minutes and 15 seconds, anyone with an Apple phone has a problem with it. So we have a very simple and easy to use podcast for that. That is going to be replacing that on June 30th. We also have a livestock podcast comes out every day. We talk about what's going on. I talk about what's going on in the cattle market. At the end of the day at 3 o'clock, I do a 5 to 10 minute market wrap up that covers everything that went on that day across everything and what was important about it as a companion to the DMO. These are really, if you've never used a podcast before, here's your chance to do it. It's really, really easy. We send out a link, click on it, and from there, just hit the button, and you can hear me blather on endlessly as much as you like.
It's really great information. It really is. And you get to listen and continue doing whatever you want to do. It's really wonderful. So, and you can hit that subscribe and just go on about your business. It's wonderful. So yes, please subscribe to our podcast, the Livestock Market Brief and the Ag Market Brief. We have two different ones. So subscribe to those. I did put in the chat box the link to to register for the June 30th special report that we have. We also have our June monthly meeting that is going to be next Thursday, the 16th. So watch the agent newsletter and make sure that you get registered for that.
That's going to be important. We have shifting sands in the weather, and the picture will be a week from now. We're going to be starting getting into that top end of pollination. And we need to pay attention to that because that could matter. And this year it may matter a little bit more because we all know fertilizer was expensive. I don't think this crop's going to be as sturdy as last year's. So,
you know what? I'm going to go ahead and put that in the chat box as well. So here is maybe, I'm not sure if it went in. June 16th, 9 a.m. Register. I don't know why it's not. There it goes. It might have gone in there twice, guys. And if it did, I'm sorry about that. But I think it's in there. Yeah, I think it went in twice, but that's all right. Go ahead and click on that link if you want to register, and I'll make sure it's on social media as well. So we have a lot of great information for you, a lot of news coming out. And then if you're getting that virtual crop report, I have both of those links in the report for you as well. So, really just get that report and you can just click right through that report and sign up for both of those meetings on the 16th and the 30th. So there you go. Anything else that you guys want to share? Any other information for the good of the order here?
stay cool next week. Only thing I would tell you. That's 90s.
Yeah. Make sure the air conditioner is working properly, because if you're going to need a service technician, you won't be able to find one.
Check your filters. Absolutely.
Check your filters.
All right. Well, thank you all again so much for joining us today. You guys stay safe out there, and we will talk to you soon. Take care.